Today's podcast is brought to you by Jerry Robinson's Market Barometer, a powerful tool for investors who want to avoid the next major market downturn. Learn more at marketbarometer.org.
Good morning, friends. Welcome to Follow the Money Daily, a daily podcast dedicated to your personal, spiritual, and financial freedom, hosted by myself, Jerry Robinson, economist, best-selling author of the book Bankruptcy of Our Nation, and I'm also joined by my wife, Jennifer Robinson, a master's of finance, background in the financial industry. She runs our Christian Financial Advisor Network. Great to have you here, Jennifer.
Thanks, Jerry. You can find us on the web, by the way, at ftmdaily.com. That's ftmdaily.com. You can find all kinds of resources and our podcast archives there.
You know, we were talking this weekend about our daily briefing. Every single day on FTM Daily, we put out a daily briefing that's just filled with all the different news that we're watching and all of the, the different, in fact, we throw in a chart of the day, we throw in a trading idea for our insiders. And we got to talking this weekend because somebody had recently asked us if we would ever consider doing a daily podcast. And I literally about fell out of my chair and laughed because, just like you, I mean, most of us just don't have enough time to be doing something like that. Well, we thought about it over the weekend and we said, let's take this week and instead of doing the daily briefing the way we have been doing it, instead, let's just take that time and create a daily podcast and see how it turns out.
Right. It seems as though many of our readers and listeners on our website, they really enjoy the podcast the best out of almost everything that we offer. And we offer a lot of services on our website, including all of our paid subscriptions, but we offer a ton of free resources. And it just seems, Jerry, that everyone's favorite is the podcast.
Yeah, we've heard that over and over. And so we said, let's just take this week. We're not stopping or ending the daily briefing, but we're just altering it. We're making it audio version, basically. And so we're going to be talking about some things today. We're going to be mainly talking about the dollar and some things that have happened with Russia. We're going to keep this brief every single day. This week, we're going to keep it probably around 20 minutes, and we're going to cover as much as we possibly can during that time. And I say we just go ahead and get started. This weekend, Jennifer and I were really paying close attention to what was happening in Rome. I don't know those of you who were watching what happened in Rome this weekend, but, just truly bizarre stuff. Bizarre stuff. I cannot remember. In fact, I do not have any memory of anything in history, even when I've studied, of the leader of Israel and the leader of Israel's enemies meeting together in Rome at the Vatican with the Pope to pray for peace. Right? That was just a very bizarre thing to me because, first of all, you have to realize that for the last 2,000 years, Israel didn't even control, or I should say the people of Israel didn't even control Jerusalem. They didn't control Israel. So they've always been underneath this foreign domination until 1948 when they became a nation. And now we're seeing a very strong drive towards peace and security. I talked about it on the weekend show and kind of explained my thoughts on it very briefly. But, we were watching that. And then on top of that, there has been this tremendous drumbeat in the overall global economy towards de-dollarization. So the two things we were really watching this weekend were what was happening in Italy, what was happening in Rome, and also how Russia just continues to hammer on the U.S. dollar. There was a story put out by the Financial Times, not part of the U.S. media. It had to come from the foreign media, and it's the title of the story is Russian Companies Prepare to Pay for Trade in Renminbi.
This doesn't seem like a headline that normal people would probably click on, and like you said, it's really not available on many of our mainstream outlets here in the United States. This kind of topic is not available to click on our mainstream media websites.
I think mainly because people don't understand what it means. Listen to this headline. Russian companies prepare to pay for trade in renminbi. That sounds totally boring. What does that mean? That means that the U.S. dollar is coming under massive fire from Russian companies, and this is a growing trend of de-dollarization. It's This, let's get rid of the dollar for global trade. Let's get rid of the dollar. In fact, as you read through this story by the Financial Times, if you go to our website, you'll see this headline there, and you can click on the link and read the story yourself. But it begins, Russian companies are preparing to switch contracts to renminbi. And by the way, that is the Chinese yuan. That is the Chinese currency, just another name for it. They're preparing to switch their contracts to renminbi and other Asian currencies amid fears that Western sanctions may freeze them out of the U.S. dollar market. According to two top bankers, over the last few weeks, there have been a significant interest in the market from large Russian corporations to start using various products in renminbi and other Asian currencies and to set up accounts in Asian locations. In essence, later on in the article, one of the, I believe it's one of the bankers, basically says this: there is no reason why you should have to settle trade that you do with Japan in dollars. This mentality is the destruction of the petrodollar system. This mentality that we're seeing right now of, why should I have to have dollars to buy goods from Japan if I live in Russia? Well, that's a real good question, isn't it? I mean, why should I have to hold dollars if I live in Russia to buy something from Japan? The reason that you do, my friend, is because we live in a petrodollar world. This is a global dollar standard. And because of this dollar standard, we have created a vast economic monopoly upon the globe. The United States has. Because our dollars are everywhere. Everybody has to hold our dollars. Why? Because that's what's required to do global trade. And so Russia is pointing at this and saying, why? Why do we have to hold dollars? Why do we have to hold dollars to buy things on the global economy, on the global trading market? And there's really no good answer. And if there's not a good answer, guess what? They're going to come up with a new solution. And this is what the United States does not want to have happen. And this is what the mainstream media is apparently ignoring. And even whenever you go out and look on the web and you look up stories about this information, you'll find that even in the comment section of many of these stories, there is very little understanding of what's really happening here. You know, the way that currencies work is very important. It's just like anything else, supply and demand. And whenever you have a massive supply of your currency, well, that can lead to inflation, right? Because inflation is a massive supply of your currency. The only way to prevent inflation, if you have a massive supply of your currency, is to also have a corresponding massive demand for that currency. And that's in essence what we have had up until now. But many countries like Russia are beginning to thumb their nose at this system and say, you know what, we don't really want to hold dollars. We want to use our own currency, or we want to use the Chinese yuan. We want to use the Chinese currency, or we want to use some other currency. This is a slap in the face, United States. But it's not a right for the United States. There's nothing set in stone that says countries must use the dollar for every single piece of trade that they do. And this is why it's so dangerous to you, my friend. If you live in America, and I would assume that most of you do, then this story really hits home more than most stories that you're going to see this year. This movement, this trend towards let's get rid of the dollar, let's use other currencies, is going to lead to, unfortunately, a very, very negative economic trend here in America.
Right, Jerry. We hear many, many people talk about a dollar collapse, a global currency reset, a dollar collapse, complete destruction of the U.S. economic system. And the question becomes for most individuals is when is this dollar collapse going to happen? It's an innate desire to want to know when it's going to happen. What is the sign? But this story right here is the answer to that question. We don't have a date. There's no, October 10th, 2015. it's watching these types of stories.
These types of stories are the undoing of the dollar, because we also saw one that was in the news last week that said Russia was going to be dealing with North Korea strictly in rubles. Basically, Russia said, we're going to use our own currency when we deal with trade in North Korea. And again, that's a really minor story. I mean, that's really minor whenever you take a look at the amount of money that's the trade that goes on between Russia and North Korea. It's pretty negligible. But the fact that they're talking about that publicly and making those moves is important. That's the trend that we're talking about. You know, all of these dollars that the Fed has printed and put out into circulation, they all need someone to demand them. Because if they don't, and if these countries begin to say, we don't want to hold dollars, and they send them back, what does that create? Well, it begins by the creation of hyperinflation. If you have all these dollars coming back to your country and, all of a sudden you're dealing with this very massive amount of currency in your system, then you're going to have to raise rates to get all that money out of your system. And when you do that, you're going to risk deflation. Deflation is the ultimate disaster awaiting the United States. There are a lot of fears of hyperinflation, and those are well justified because certainly when this whole system breaks down, hyperinflation happens first. But the really bad disaster comes after the response to the hyperinflation. When all that money is sucked out of the system, then deflation takes hold. You have less money in the system. And when you have less money in the system, what that leads to is lower asset prices. So that house that you just see going up in value every single year, and you get that assessment record in the mail, and, oh, look, your house is up, another 10% this year. Well, it's going to start shrinking. Oh, look at your 401k value. It's just rising and rising and rising. That's inflation. When deflation happens, it goes the opposite way. You walk into the store and you see prices of things going up, 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 up. Well, now suddenly prices are suddenly going down because there's less money in the system. And you say, well, that's great. Prices are lower. Well, one more thing. Your paycheck. Oh, look, it's going up. You're getting that raise. But suddenly in deflation, your paycheck begins to go down. This is the ultimate death of all empires because they cannot justify the amount of currency that they have created because the globe will not demand it. They will not hold it. And therefore, if you don't have somebody to hold all that currency, it has to come back. And when it comes back, it either A, is going to create massive inflation, or B, they're going to suck it out of the system, and all of your asset prices are going to plummet. That is the future for America, unfortunately, because we've created too much money. We've been too reckless. And so this story, in essence, is telling us that this trend is afoot. There's this little quote at the end of the story from the economic advisor to Mr. Putin himself. And it says, he says, quote, as long as Russia is not subject to systematic sanctions, which could bring an artificial limit to our economy's access to dollars, then I don't think Russia will take any steps in order to bring about artificial de-dollarization. So in essence, they're holding us hostage. They're saying, look, if you don't put sanctions on us, I don't think we're going to approach that. We're not going to take this tack. But if you do decide to put sanctions on us, then we're going to have no other choice but to eliminate the dollar from our international trade.
Right, and it kind of makes you wonder which came first, kind of like the chicken and the egg question. Did this whole Ukraine, Crimea incident start everything? Did it initiate this whole de-dollarization argument, or was Russia thinking about moving away from the dollar, and then suddenly Russia starts getting demonized in the news? This Crimea incident, everything's happening in Ukraine, blood in the streets.
Yeah, hostilities are certainly rising here in America towards Russia. A lot of anti-Russia sentiment. You'll notice that in the news, and especially in the mainstream news. And then if you go to Russia, you'll find out that anti-U.S. sentiment is on the rise also. So they don't like us either. They're hearing bad things about us in their media. And remember, the media is what controls things. I mean, they're the propaganda masters. They're the ones who really control what you think about everything. Think about it. We've talked about this before. What do you think about Iran? Right? What do you think about Iran? You think about Iran whatever you've been told to think about Iran, don't you? Well, they're a terrible backwards country. Well, probably so. Have you ever been there? Oh, no, you haven't been there. But what you do know is what the media has told you. But you don't trust the media. And so, therefore, what do you trust them to tell you about Iran or any of these other countries? And so many times you'll notice, if you'll check your own heart, you'll discover that you have very deeply held convictions about places you've never been to. Where do those come from? They come from the mainstream media, right? You are told, you are programmed what to believe. You're told what to think about other countries, about other people. You're told what to think about individuals. Who? By who? The mainstream media. We were watching some documentary. I can't remember what it was, or maybe it was a news story. And one of the congressmen slipped up and said, whatever's in the mainstream media this week, you better believe it's going to be in Congress next week. And I about fell out of my chair. It was a senator, I think, who said that. I can't remember if it was a congressman or a senator. In essence, admitting that the guys who control the mainstream media control what's happening in Washington. Now, we know that. But that was just astonishing.
It was an admission of that.
It was an admission. He said, yeah, whatever is in the mainstream media this week is going to be in the Congress the next week. What a bunch of pansies. I mean, they're totally controlled by what the media tells them to do, right? And who controls the media? Well, 5 giant corporations. It's a fascinating study if you've never taken a look at who controls the media. But the media wants you to hate Russia. They want you to despise Russia right now, at least for right now. Whenever they're done with this whole incident, maybe they'll go back to a place where you like Russia and you should support Russia. But right now you're being told that Russia's a bad country and Putin's a bad, evil guy. Now, whether that's true or not is completely irrelevant. The point is that's what you're being told by the mainstream media. That's our point. And, here's the thing about China and Russia to keep in mind. They have long, sordid monetary histories. These countries, in fact, China was the very first country to have paper currency. Did you know that? You did know that, didn't you? That back in about 1000 or 1100 AD, they came up with the very first paper money. And it ended in, guess what? Disaster. The way every paper currency ends in disaster. Well, China and Russia both have long, sordid histories with money. And their leaders, I don't think, they're under no illusion about paper currencies. So they're not just squandering for dollars and trying to get as many dollars as they. In fact, if you look at what they're doing, they're trading them for what? Hard assets. China's buying massive amounts of gold and continues to, even as gold prices have been in kind of a free fall lately. Russia's been doing the same thing. Now, I strongly believe that gold is going to play an integral part in the rising of China and Russia and their economic alliance. I think gold's going to be a fundamental part of whatever ends up coming out of this. History
repeats itself. Gold played that vital role in the rise of the United States back in the 40s, 50s, in the rise of the dollar as the world reserve currency, because every dollar was backed up by gold.
Yeah.
So with China really building up their gold reserves, I guess we don't know exactly how much they are buying, but we know it's a lot. And so how can it not play an important role? I mean, history is bound to repeat itself, and gold has been money for forever, basically.
It's
gold and
been
silver.
Money. Well, if you have never read, those of you listening, if you've never read our Petrodollar article series, it explains this situation perfectly, and you can go download that free report online at ftmdaily.com/petrodollar. They can go there and they can read that. It's a 4-part article series. It really details a lot about the history of the U.S. dollar ever since the 1940s, whenever it became the de facto world currency, and then the breakdown of it in Bretton Woods, whenever Nixon got on TV and closed the gold window and ended the dollar standard internationally. And then in 1973, 74, when the petrodollar rises, all that is explained in that report. Very fascinating report. I encourage you to download it if you have not seen it. Now, just one more point before we kind of wrap up today's show. The ECB, they made a recent move last week on Thursday, and Mario Draghi, who is the president of the ECB, basically came out with a couple of things. A, they cut their benchmark interest rate from 0.25 down to 0.15. Kind of negligible, but still, it's almost near zero. they changed deposits for commercial banks in Europe to a negative interest rate, meaning that you now have storage costs to hold euros at the ECB, which is just insane. And then finally, they did a few other things, but the main thing that I really caught was the fact that they said, we stand ready to do an asset purchase program. In essence, what they mean by that is we're ready to buy euro bonds. We're ready to start pumping money into the system, printing it, and pumping money into the system. Right.
The European Central Bank, the ECB, is on a very similar path. It resembles what the Federal Reserve started doing back in 2009, 2010 with the quantitative easing programs.
Yep, they started getting real aggressive. And
the ECB hasn't started these asset purchase programs, but like you said, it's all but certain. It seems very inevitable.
Well, what's really telling about it is this week, or last week and this week, how the euro has responded. It's been very resilient. The euro popped up in response to the information, which is exactly the wrong thing that it should have done. It should have went down in response to that, indicating that investors want more. They're not satisfied with these meager interest rate cuts. They're not satisfied with this negative interest rate. They want money printing. That's exactly what they want. If you look at U.S. Stocks, they're at all-time highs. How did they get there? Because volume is weak. How did they get there? Economic growth is tepid. So how in the world did the United States stock market get to all-time highs? The Fed is pumping in billions and billions and billions and billions of dollars, $1 trillion a year as of last year, and now we're down to about $45 billion a month, but they're still pumping money in. Go to Japan. You see stocks have been on a roller coaster ride as the Bank of Japan has been pumping in 7 trillion yen into the economy every single month, okay? China, aggressively goosing its economy with stimulus as their currency, the yuan, is sitting at the lowest point that it's been for the last 18 months. And the Eurozone comes along with a paltry 10 basis point interest rate cut? I don't think so. Investors are not going to be happy with that. The Eurozone's facing a 12% unemployment rate. It's an absolute disaster on the economic level, and it's been dragging its feet to print money. So if Europe wants investor money to pour in from around the globe, it apparently needs to get much more aggressive, and that's exactly what we think is getting ready to happen. We think we're going to see the bazooka break out, and Mario Draghi at the ECB is going to announce an asset purchase program, and when he does, economically speaking, the way this is all supposed to work, now I realize all the relations are beginning to break down the way things work, but technically what that's supposed to lead to is higher European stocks. And I think there's no doubt about it that that's what we're going to see. So we are strongly bullish on Euro stocks. We've been that way for some time, and we continue to be that way going forward. Now, before we bring the program to a close today, this has been fun. You like this?
I've had a blast.
We get a chance to talk about what's happening, and sure, we could have wrote it all out on the Daily Post, but instead we actually talk about it. And I don't know, it just seems more fun and more natural, I think.
Right, and please, by all means, those who are listening, tell us what you think. If you like this format better than an article on the website to read, then send us an email, info@ftmdaily.com. That's info@ftmdaily.com. You can tell us if you like it or if you don't like it. Please just tell us and let us know, and we will take your thoughts into consideration on what we decide to do moving forward.
Yeah, we definitely want to hear from you.
Now let's take a look at the financial markets before we close the show. Jerry, the S&P 500 is sitting at about 1951 and some change.
That's a really important key level, by the way. The 1950 level it's a huge psychological resistance point. We neared it last week and couldn't break it, but now we're moving above it. If we can close above 1950 today, that's going to be very bullish for the S&P.
We have gold at $12.54. We have silver sitting at just above $19. What's going on with those prices today?
Yeah, both gold and silver are just not in a buy mode right now. I mean, you definitely want to buy them for long-term purposes, but as far as the overall short-term trend, we don't have a buy signal yet. Our Trigger Trade Pro subscribers can log in and watch the price of gold, watch the price of silver. We even put out a video the other day, how to trade gold online with the Trigger Trade Pro system, so all of our subscribers who have access to that can type it in. But they can clearly see right now, as I'm looking at it right now on Trigger Trade Pro, there's just no buy signal yet on gold. It's coming. It's coming. And right now it's carving out a nice bottom. And speaking of buy signals, this morning our daily trading idea for all of our insiders is a coal company. It's a coal stock. Coal industry has been in free fall lately. However, amid the carnage, a new trigger price has appeared on one of the low-priced coal stocks, and all of our insiders can log in and see that stock that we're looking at today. We have a trigger price on it, which is the entry price where we would buy, along with a sell price and a potential profit. We expect to make about 3 to 5% on this stock over the next 7 to 10 days if it triggers. And you can learn more about that, all of our insiders. You can log in and see that trading idea at ftmdaily.com/daily trade. And if you don't currently receive our daily trades and you want to, you can become a subscriber by going to our website at ftmdaily.com/subscribe. Well, friends, we really enjoy this very first edition of our daily podcast coming to you. We're trying this out for the week. We're going to see how it works out. We'd love to hear back from you. As Jennifer already mentioned, email us info@ftmdaily.com or call us 800-609-5530. And as always, I leave you with today's final word. It's a scripture found in Matthew chapter 6, verse 33. Jesus says, "Seek ye first the kingdom of God and his righteousness, and everything that you need will be added to you." Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. And we'll look forward to seeing you right back here tomorrow. God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.